Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, November 10th, 2021. It is just after 10 o'clock Eastern Time. I wanted to wait till the market opened, and actually, and I like what I see so far. So I wanted to get a video out to you guys, and we'll just keep it focused on a brief update on the stock market and then also on the precious metals. It's definitely something worth noting there today. All right, just to start out here, I'm starting out with the longest term time frame to just do an update and continue to point out this is a long-term chart, a monthly chart with a very simple but effective trend indicator, and that is the PPO. So we got the PPO lines down here, the PPO line, and then the signal line, which is the 9 EMA, and then the histogram just visually shows you when they cross. And so I've gone over this many times. You can see the crossovers. Even this was a double-digit correction here, and it was triggered or came correlated with that crossover there in the PPO. We had the 55% roughly bear market back in 2007 to 2009. That was also signaled there. These were dips. They weren't much. And you want to call them whipsaws, call them whipsaws, call them what you want. But even within the bull market since then, if you want to call those two whipsaws we've had, the rest were all successful. Even this little blip down here coincided with the 31% drop when COVID hit, and there was about a 24% drop, 26% drop back in 2015 in QQQ, and so forth and so on. So I just wanted to mention that we won't have any update on this until the end of the month, but you can see once the hills start going down, well, I call them hills. Again, it's a histogram that just shows the differential between the two lines, and it's everything in the stock market and economy and in life and sports games. It's all about momentum, and momentum starts to wane, and the stock market over time looks like an escalator. It's not completely up, down, back, forth, but you get those trends. And again, we're looking at a monthly chart. You're looking at the bigger trends. So, the lines are coming together. They're poised to cross over. Doesn't guarantee they will. And again, I'll update that at the end of the month. But a lot can and will happen, or is likely to happen, I should say. A lot can happen between now, November 10th, and the end of the month. So we'll update that at the time. Now let's loop all the way down. Let's just hit a daily chart real quick. We'll just stick with the Qs for now. And you can see there's the same trend line I was focused on, the 60-minute chart, nice and clean on QQQ, and it's clearly broken, right? Even yesterday with the sell signal on the 60-minute charts, it gave us a kind of a head start or jump. We didn't have a breakdown or a solid break. You can see when we close the day, depending on how I scroll and roll here, that trend line moves around a little bit on this platform, but you could say we broke it, and then when I do that again, it moves off. And again, I don't want to have to get so close. You want to see a clear, that's why I always talk about a solid break of support, and that's what we have today now. Okay, so my point here is this. Here's the 60-minute chart. There's the wedge overshoot I was looking for. There's our rising wedge. Yeah, that little burst, that last minute burst, which does a lot of things. It blows out a lot of shorts. It's capitulation on short sellers that were short the indexes. They throw in the towel. A lot of longs get giddy and buy in. And that's what makes it so powerful. Again, we have the sell signal. I always say this, there are no guarantees. This market, and believe me, the last thing it's going to do is anything that surprises me at this point, based on what we've seen in the last couple of years here. But it is a sell signal nonetheless. And so the point of this video I wanted to say is if you believe in that, and that's your take on the market too, we're very early on in the sell signal. It's still very objective to short, and in fact, and again, the reason I said I like what I see today, if you were getting all bearish this morning when we gapped down and you shorted, well, again, I like to get short ahead of time. That wasn't the most objective time. Now we've had a snapback of about almost exactly 1%. You can see in my measuring there, it's like 0.99, 0.96 from the low this morning. And here we are, 1% pop right back into resistance. You can see we have the gap right here. Gaps are quite often backfilled, and so it would be actually almost beneficial or preferable to go ahead and backfill that gap and leave no unfinished business behind and then continue down. So again, I cannot, reiterate this enough. There's no guarantees that that's going to happen. We could just blast off, and maybe this, proves to be yesterday's breakdown a false breakdown, a whipsaw, and the market goes to new highs. But where I'm going with this, if you believe that the sell signals, may play out, or even if you're not sure, you just want to trade objectively, this is where you short. Once you're in a downtrend, especially early on, not when it's very long in the tooth and it's almost over and divergences are looking like a bottom's coming and we're approaching our maximum or final price targets. You don't want to really buy short the rips then. But at this point you do, and that's what I was trying to get at here is, during a bull trend, buy the dips. When the market's going up, you buy the pullbacks, the dips, and then in a downtrend, you short the rips, especially when they're into resistance. And so the resistance is going to be the top of today's gap, which is yesterday's close. That's denoted by the yellow line right here. So that's it. Let's not make it any more complicated than that. It either works or it doesn't work. When does it not work? Well, we can certainly go and back test that trend line with a wedge overshoot. Like I said, you don't always get what you want. It's not what I want to see. It's not ideal with these patterns. I don't see them often. When I do, they're pretty powerful, like I said, and it's usually it traps a lot of longs in there, and because the short interest is blown out, that's usually why you get a pretty swift move down. So I'm going to end it here and just say that I'm viewing this snapback rally as an objective area to short. If you liked it this morning on the gap down, how can you not like it at a much better price? Shorting is like buying in reverse. You want to short at a higher price. Like when you buy a stock, you want to buy it low and sell high. Shorting, you want to sell high and cover or buy low. And of course, QQQ is not the stock market. No one single index is, but the S&P is more representative. You have more broad-based exposure and diversification among more sectors, and not as much of an overweighting in tech, even though it's still the largest. But there it is. S&P 500 hit that 465.47 support level. I believe that was covered in yesterday's video. We hit at the low today, 465.31. So 16 cents on a 465 point security. You're talking basis points, or a very small fraction of 1%. That's almost a perfect tag. So my point is, this is nothing more than the expected and typical reaction off support. We hit it. We had a bounce. And now this is what you want to watch. So let's say you don't want to short the rip. You think it's being bought up too aggressive, or you're still not convinced on the breakdown. Well, you can wait, and your next objective short entry then will be a break of 465.47. Well, really today's lows. When we spiked a few cents below it, like I said. Otherwise, a back test of the trend line would also be objective. Okay, moving on. The stock market's been at least for me, difficult beast to call. We called the last correction down, fell a little shy of my max target, but we hit, all the 4 of the 5 targets, I think, on the S&P, and what was it, 2 or 3 of my targets on the NASDAQ 100. Then we reverse off that divergent low, but where the easy money, or what's been trading very well to the technicals, or actually, I should take that back. I've just been calling this one pretty well and been pretty persistent bullish on gold and silver. And when I say trading well to the technicals, so this was where I said I was kind of overriding what I saw, meaning usually when you get a divergent high in a downtrend, we had a divergent high here, another divergent high, another one there, and saying those are usually the catalyst to the next big leg down. But what happened with this one, we had a beautiful, well-defined uptrend line, broke down, back tested it, and just as that correction looked like it was starting to get going and getting the gold shorts all excited and stopping out a lot of longs, that's when they turned around and ramped it up. And the reason I wanted to get the video out this morning is there it is. It's that 1838 level right there. Boom, we didn't just break out, we broke out impulsively. So at this point in time, I kind of mentioned before, if you're a swing trader, trend trader, you might just want to hold on to this one for a while, not get cute and try to game all the squiggles in it. And that's what's happened so far. We could, look, if we pull back and back test that level, or even a near back test. Let's say we come back under or reverse just above. Anywhere in there will be an objective long entry or add-on to a position. But at this point in time, we broke out. It's powerful. This is one of the strongest moves up in gold in a while. Are we getting overbought? Sure. But again, this is a powerful technical breakout. We've been struggling with that level for months, and nothing but bullish action, especially with the fact that that divergent high and the breakdown here got bought up just as quick as it started to get going. And so I wanted to do an update there. For those of you that didn't, catch the headlines, CPI came out today, and it was the hottest inflation data. Let me grab I'm looking at another monitor here. Headlines said it was the U.S. inflation reached a 30-year high in October. So Powell is still, I don't know, I'm going to say clueless, and has been for quite a while. At first, he was in complete denial about inflation. Then he started to kind of backpedal gradually and say, "Oh, okay, we recognize it, but it's transitory." And at what point, with inflation continuing to just roar in broad base, it's not any one particular commodity. And one aspect of the CPI that they talked about is rents. Rents are, I think, a third or something, about 30% of the CPI, Consumer Price Index, and they're finally starting to tick up. And I think the data's lagged, and so they say when that starts to take off too, because housing again is a big component. We all know what home prices do. You either buy a home or you rent, and we all know that house prices have been just going crazy, and costs of lumber, all materials, from the nails to the cement to the lumber to the labor, it's all just up there. Anywho, that's that. And we're starting to finally see it tick up in rents. So what this is, where I'm going with that, guys. This is finally people are realizing, oh, okay, and I don't know why it's taken so long from a fundamental perspective. Technically, gold had a big run, it's in a bull market, and this has been bull market consolidation, as I talked about. But all of a sudden today, with those super hot CPI numbers, the inflation data, people are saying, well, what's been one of the best inflation hedges over time? Gold. Gold had a huge run back in the 70s, late 70s, when inflation was really hot, and that's finally what happened here. We had a fundamental catalyst which led to the technical breakout above that level. So that's it. Let's not spend any more time on it. We back test. We can come on through there. We can fall back down here for all, and I'll still be fine as long as we don't take out 1809. We start to do that. Even a move below will be a false breakout if we go much below it. So we'll have to watch that. And like everything else, as adamant as I've been on this trade for a while, you don't fall in love with it, and that's what stops are for. And look, if they come down and they clip your stop and it does this and it moves back up, you can always get back in. But as of now, looking good. So let's just take it on that. And if we back test, great. And one thing that a lot of securities will do is move a quick move up like that, and it leaves a lot of the wannabe longs, I call them Johnny come latelys, that want to get into gold. We're waiting for breakout, and said, oh man, I'm not going to chase it today. By the time they logged on, gold and the mining stocks were too far ahead, and then sometimes that happens. It just doesn't let you in. So like I said, I think best to sit tight for now, and if you have a little dry powder, you can certainly add on a pullback. And just like on the stock market, short the rips, and on gold and the miners, buy the dips. Silver too, one of my favorites. Again, the gold silver trade, the miners trade either, both, get diversified. That big 24,867 level was support here, then you broke it and didn't just meander on down. You had a waterfall sell-off. When you came back to test it again, you had violent selling, a big strong reversal and correction off that level that shows it was a very significant technical level. When they ran at it again, knocked down once more, but this time a lot less, and you put in that inverse head and shoulders pattern right here, and boom, we broke out. Now the breakout is there. It's brief and marginal. I mean, we're looking at 2-hour candles here, and so we're working on this candle right now. Bottom line is, guys, it's a breakout, and we'll take it on face value for what it is. But but the more we get away from that level, the more it's going to validate the breakout and decrease the chance that the breakout's going to fail. So I just wanted to say, looking good so far. Let's see how the day ends. I've seen breakouts get faded and fail, and it's just the nature of the game. Last but not least, I don't update the miners every day because the miners are going to follow the metals at almost all points in time. So it goes to stand. If I'm bullish on gold and silver, I'm going to be bullish on GDX and SIL and the individual miners. And again, they had very constructive charts too. You know, I haven't updated this in a while, but I pointed out at the time you had a back test of this trend line right here. You break out, back tested it. You put in a divergent low, little bullish falling wedge. There was big support here, about 30, 70, 31 or so. You rallied off there with a divergent low. And then here you had even better. Might sound crazy, but to me, you know, I talk about this all the time. The only thing more bullish than a successful defensive support in a rally is a fake out, aka bear trap, false breakdown, because again, it sucks in the shorts, which give fuel to the rally once they realize they're wrong. And as they, you know, there's not a single threshold where every short seller realizes they're wrong. They all, you know, have different thresholds, i.e. stop levels, and they start to cover. So far, anybody that shorted the breakdown there, and it was a well-watched level, is underwater, and they're getting more underwater today because we just took out the previous high in GDX. So it would only stand to reason that if they rode it out that long, they probably had stops not too far above that high, which we just took out today. So again, we're there, not by a huge amount. That's also resistance I've had on this chart for quite a while, 34.17. So if we can power on through there, nothing but bullish, and that's what I want to see. So today should be pivotal, or the next few days, let's just say. I want to see this breakout hold. If you know, GDX has had a big run lately, so look, if we pull back, not a big deal. It's run up from the last 5 trading sessions. Is that what we're at? 1, 2, 3, 4, 5, 6. Well, this one's just getting underway. It's run up 11.5%. So it can certainly pull back. It's near term overbought. Doesn't mean it can't go up anymore. And if it pulls back, there's a cap right there. There's your objective entry. And you know, depending on where you're at, I can't suggest a stop because I don't know. Everybody's different where they got in. If there's a single lot, if they're averaging in, that would be a tight stop certainly. And you know, at this point in time, we already had the fake out move. That is the low, but I would want to see gold remain above the 30-ish level. I'm sorry, GDX that is. But I don't think it's going to go that low. And again, if it does, that's what stops are for. I've seen nothing but bullish price action recently, and it's quite likely that we have a resumption of the bull market that began back here in 2015. You know, this is a bull trend. There was a low. We've been walking higher. And you know, here's where GDX was back in 2011 when we were in a one of the lowest periods of inflation in decades, and now we're in the highest, most aggressive inflationary environment, going back in many cases, depending on what metric you use, into the 70s, at least for the last 20, 30 years, or 30 years according to today's numbers. So it stands to reason that gold and the mining stocks may have a lot more to go. Last but not least, of course, silver mining ETF, SIL. That's been one of my favorites as well. And I just want to point out, just like silver I showed you on that 60-minute chart, you also have a potential inverse head and shoulders bottoming pattern here. There's your neckline right there in blue. Here, we'll do this. Turn off all those other lines and you can see it a little more clearly like this. Draw down a neckline, and it's perfectly normal to have a downward or upward sloping neckline. Two left shoulders ahead and a single right shoulder. And look, maybe we run up here, pop there. No, this is going to fit better. This neckline fits, and that is then a breakout of the pattern there. But you're also once again right at resistance on SIL. I've had this line here for quite a while. Created this line back on December. Oh no, maybe not. My mistake. A lot of these lines were on this chart. This one I created back in October 22nd, about a month ago. Not even. But I did that because that's resistance. There's that previous reaction high, some reactions there, some there, It's just a level I see as resistance. So in summary, nothing but bullish price action so far, especially today with that breakout in gold above the 1809 level. And if we can hold this breakout and especially build on it, then again, that to me has intermediate and potentially longer term bullish implications. Intermediate, I'm talking weeks to months, long term, months to years. Okay, 20-minute video. I'll wrap it up here. In summary, in the stock market equity index, I'm selling the rips. There's that gap right there. I mean, that's to the button. Sorry I didn't get the video out to you guys sooner. Well, I wanted to get out as soon as I saw them starting to buy up the open. It is still not too late. This video should be out to you as soon as I get it uploaded to YouTube and they finish processing. Even before they're finished rendering, I've been sending them off to you. So if you've just a kind of a side note, if you get an email notification, you start watching a video and it's not in HD, high definition quality, and you go down to the settings and you can't select that, it's because I posted the video, it was timely, I wanted to get it out before they completely finish rendering it on their servers. So all you have to do is either refresh the page or keep clicking that settings icon. I think refreshing the page will get it there quicker, and usually within 5 minutes after you get the email, the video should be fully rendered. The longer the video, the longer it's going to take to process on their servers. But I just wanted to share that with you. All right, let me get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.